Everything you're about to hear is for education and entertainment purposes only. Whilst we are licensed, we're not aware of your personal financial circumstances. Any advice is general advice. Equity Mates operates under Australian Financial Services Licence 540697.
Shut up and take my money.
That is an all-time low.
And the old bear is back.
I'd buy that for $1.
Telling me, dream.
Hello and welcome back to another edition of Buy or Sell, coming to you from the No Holds Bar here at Equity Mates HQ. I am your host, Adam Keily, widely regarded as one of the simplest minds in finance. Luckily for us, I'm joined by an expert to educate me and hopefully you on how they're thinking about stocks and the stocks they're thinking about. This isn't a deep dive though. We're going to rip through as many stocks as we can in the time that we've got. And today, I'm really pleased to welcome into the No Holds Bar Lucas Goode, Portfolio Manager at IML. Welcome, Lucas.
G'day, Adam. Thanks for inviting me.
Great to have you on the show. Now, Lucas, it is a tradition here in the No Holds Bar that we start the show by offering you a beverage, a drink. And our signature cocktail this week is the classic Shirley Temple and Webster, because we are talking Shirley Temple and Webster a bit later on. What's your drink of choice, Lucas, if I can get something for you?
I did used to very much like a non-alcoholic Shirley Temple when I was a little kid, but I probably won't order one of those now. I am supposed to be on a health kick, but as soon as you're buying, Adam, I'll stay true to my South Australian roots and go for a Rockford's basket press, I think.
Oh, lovely. I didn't realise you're from South Australia as well.
There's a few of us around, actually.
Oh, love it. I love meeting a fellow South Aussie. Excellent. All right, plenty of stocks to get into. We're going to start with Nextgen Energy, ASX NXG, uranium miner. They name their uranium deposits after simple weapons, it seems. They've got bow, arrow and harpoon. I'm excited for the upcoming prison shank project to kick off. Lucas, Nextgen, is it a buy or a sell for you?
It's a buy, Adam. I wasn't aware of the harpoon deposit, but it's a great name. I might have to adjust my valuation upwards. I don't know where they're getting these names
from, but
look, the thesis here is pretty simple. Obviously, any watchers the ASX will have seen uranium's been pretty hot. Boss and Paladin, the two producers, have been on an absolute tear. Nextgen owns the highest grade undeveloped resource in the world in uranium. It might be the best undeveloped resource of any commodity globally.
Right.
It's in Canada, so a tier 1 mining jurisdiction. I mean, just to give you a sense of how high grade it is, Paladin's Langer Heinrich deposit in Namibia is 400 parts per million uranium. Arrow is 31,000.
Wow.
So, there's no in situ recovery. It's just a straight hard rock mining. It'll set a new benchmark for lowest cost operations once it's in production. And really, we also think it's probably a big company asset. So long term, I think it sits within a Cameco or a BHP rather than these guys developing it themselves. But it is the best uranium asset on the ASX.
And we're expecting uranium sort of demand to keep increasing?
Yeah, look, I think it should, Adam. It's always hard to forecast commodity prices, right? I used to have these podcasts with your economist brother. And
I wouldn't read too much into what he said, though. Absolutely.
Well, but the joke's always that economists can't, you ask 100 economists, you get 100 views. I find commodity price forecasts are about as accurate.
Yep.
But having said that, clearly nuclear energy is back in vogue. There's a lot of new reactors being built. There are supply constraints, which is always a good setup for commodity price increases. I guess the issue is that you look at the ASX, I think Paladin's probably pricing at $150 uranium now.
Yep.
The price is about 92, I think, at spot.
Yeah, okay.
Nextgen's cost of production's about $9 or $10 once they go into production. So, we see it as both the highest quality resource, but also actually being better value than some of the ASX listed producers.
Yeah, awesome. All right, it is a buy.
I think I'm going to buy.
Next, we're going to look at Temple and Webster Group Limited, ASX TPW, currently trading at $9.78. Good time to buy Temple and Webster. They've got a 20% off store-wide sale at the moment, Lucas. So
look, it might be a good time to buy some furniture, but I think the stock's a sell, Adam.
It's a sell, right? Okay, why is that?
So, look, e-commerce in general is not really a sector that we favour.
Yeah.
Some real issues we think with pure play e-commerce in that it's just really hard to get any operating leverage.
Yep.
So you're constantly dealing with low margins. And that's because you got a lot of logistics costs, particularly if you're shipping bulky stuff like furniture.
Yeah.
But also the paid advertising just kills you because the customer acquisition, you don't have a store network to bring customers into the store. And what you generally find is these online retailers, they try to juice their margins by cutting back on Google.
Yeah.
And then their revenue falls off a cliff.
Right.
And we've really seen that with Temple and Webster where, at 100 times EBITDA, that's a nosebleed multiple for any retailer, even a retailer that doesn't have any stores. You really got to buy into management's forecast. And by the way, I think management have actually done a great job.
Yeah.
I'm not saying it's a bad business, just that it's overvalued.
Yeah.
You really got to buy into that margin expansion story. But they got in a 2 to 4% EBITDA margins this year. That's less than they did 4 years ago, and revenue's more than doubled during that time. To me, that suggests they are going to have a hard time expanding those margins, and in that case, the stock just looks overvalued to us.
Yeah, and is there a lot of competition increasing as well in that space?
Well, that's the other thing with e-commerce. I mean, particularly if you're drop shipping, which they do with some of their product, they do have some private label, and that's how you can expand margins is when you can grab some of that manufacturer margin as well. But there is a lot of competition, and actually, interestingly enough, they've got a US-listed peer, Wayfair.
Yeah.
You look at Wayfair, that made money for about a year, and now it's gone back into losses. It's e-commerce is just tough.
Yeah. I tried drop shipping for a while from Kmart and it didn't work out.
Yeah, I've got mates that set up e-commerce businesses. They're not that hard to get off the ground because you can set up a shop pretty quickly with Shopify.
Yeah.
But because it's easy, a lot of people do it, and therefore margins get competed away.
Yeah, there was YouTube videos telling me how amazing my new side hustle was going to be. Turns out not so good. All right, next up we're looking at Imdex Limited, ASX IMD, currently trading at $2.22. Nice feature in the Canadian Mining Journal. I don't know if you caught that, Lucas. These guys are a mining solutions company specialising in downhole navigation because it turns out there are some places a Google Street View car just can't go. Buy or a sell for Imdex?
It's a buy.
Yep.
That's a buy. So look, this is really all around. Maybe if we take a step back with Imdex, which is a global leader in mining technology solutions, if the world is going to need more commodities for the energy transition, that means digging more stuff up out of the ground. Yeah. Mining is really turning big rocks into little rocks. And then you've got to know what the big rocks are and what the little rocks are that you've just created. Yeah. And that's what Imdex's solutions help with. So they help you get those rocks out of the ground faster. They help you know what you've got in the ore body. Yeah. And as these deposits get deeper, they get lower grade, they're harder to find, that's going to mean that there's a greater share of wallet that's going to go to the services providers like Imdex, or at least that's our thesis. Yeah, right. And interestingly enough, with the market, is sometimes you got to almost zig when the market zags, and the market can get very caught up with Imdex. It trades around a lot on quarterly numbers that they put out. And lately, drilling activity has been lower than you might think with where commodity prices are for various reasons, whether it's capital markets being shut to juniors or just drillers being hard to find and hire. Yeah. But then you take more of a medium-term view with where copper and gold prices are, implies exploration should grow, benefiting Imdex. And you take that longer-term view that we're just going to need so much of these minerals that Mother Earth has got to offer us pulled out of the ground. The long-term future for Imdex is very bright, and at about 8 times EBITDA, you're paying what looks like almost a trough multiple on trough earnings right now.
Does that protect you somewhat from, like, if you're investing in mining as a kind of industry, does a mining solutions company kind of abstract you a little bit from, where the copper does well or uranium does well or whatever? You can kind of go, well, these guys are doing the tech.
Yeah, well, what does help is they're commodity agnostic. So whether you're looking for gold, copper, lithium, anything in hard rock in particular, you're going to need their solutions. So you're right, you are protected somewhat. You'll often hear investors refer to, oh, well, if you want exposure to a trend, then maybe you want to own the picks and shovels. Yeah, right. Or in Imdex's case, it's the fluids and tools that you want. And yes, you are protected somewhat to the downside. And then even in after a bad quarter, they're still highly profitable. Whereas with a miner, where you got to sink a lot of capital and then you don't know where the commodity price is going to be 5 years, 10 years down the track when the mine actually goes into production, it's just a lot riskier.
Yeah. Assuming we just continue to keep digging holes in the ground, right?
I think that's the one thing we can promise is that there's still going to be a lot of holes being dug.
Very good. All right, Imdex is a buy.
I think I'm going to buy it.
Next, we're looking at Cettire Limited, ASX CTT, currently trading at $2.33. I think this speaks volumes about my fashion sense, actually. I've never heard of Cettire. I'm not even trendy enough to wear the alleged fakes that I was reading about. Lucas, Cettire Limited, as buy or a sell for you?
It's a sell for me. And look, as you rightly touched upon, it's been a bit of a battleground stock in the media and amongst investors. So I was going to say a Vegemite stock, but then I've got a sell on it. But I like Vegemite, maybe it wasn't the right analogy.
Big fan. Yeah.
Look, like you, I'm not much of a fashionista, but I can say the empirical evidence I've witnessed firsthand in my own home is that online fashion retailers have a real problem with returns.
Right.
And so even when you're drop shipping, how do you deal with those returns when then the customers, mostly women, order four dresses so they can try them on, send 3 of them back?
Yeah, right.
Look, for me with Cettire, they've actually done an amazing job growing revenue and the numbers are actually pretty good.
Yep.
They make money when none of their peers do. But that's part of the problem for me is I can't figure out how.
Yeah, okay.
And so when none of their peers make money...
That's a bit of an alarm bell, right? If we
look, maybe it shows a lack of imagination or investigation on my part. I did think it was interesting that they were, as you say, a lot of those articles, particularly in the AFR, did a lot of reporting around customs duties and that Cettire was potentially charging customers more than they were handing on to the relevant authorities.
Yeah, right.
Potentially a bit of a red flag, but...
Everything is a birthday present.
Look, we've all done it when we've come back from overseas, right?
Of course,
Then the first quarter that came out after that reporting, I just thought it was interesting that margins got crunched.
Yeah.
So it's one that we're steering clear of. And again, just on valuation grounds, we are value investors at IML first and foremost.
Yep.
Looks really stretched to us. And as I say, I just struggle with that drop shipping model.
Yeah, fair enough. All right, Cettire is a sell. Next, Austal Limited, ASX ASB, currently trading at $2.39. Now, Lucas, I've been thinking about buying a boat. I've been tossing up between a second-hand 12-foot dinghy or maybe going new and getting a Guardian class patrol boat.
You could go bigger and get one of the US Navy warships.
There we go. See, but I'm just not sure if the retailer's going to be around in 5 years.
Oh, you don't know. Yeah, the resale value might not be great.
Yeah, that's right. Yeah,
particularly when you think that the whole reason why we're bullish on Austal is that unfortunately defence spending is rising around the world. I say unfortunately because it's clearly in response to an increasingly unstable geopolitical environment.
Yep.
And that to us means that Austal is actually one of the best stories on the ASX. In that, and here's an interesting one for you. I mean, so it's the only Aussie listed US defence prime contractor because most of their revenue comes out of the US.
Yeah.
Austal built 12% of the current US Navy surface fleet by number of vessels. Yeah, okay. So it's a meaningful part of the US industrial base. The shares are trading at NTA backing effectively with a $25 billion order book. To us, those two things just really don't marry up. And finally, in Australia, our government has now recognised that this is quite a strategic asset we've got in Austal, and they've effectively guaranteed that Austal will be the shipbuilder now for future Australian Navy programs moving forward, which guarantees that their shipyard in WA will be full for about the next 15 years. Right. So we think there's a really bright future ahead from Austal. It's had a pretty rocky past.
Yep.
And I think what you often see, particularly in small caps where I play, is that you got to kick a lot of rocks to find a diamond.
Yep. And
then you got to go back to rocks you kicked before and see if they've somehow changed since you last kicked them.
Yep.
And we think that it's the case with Austal that they have disappointed people in the past. It's been written off as well. Maybe this isn't a very high quality company.
Yeah.
But to us, that future outlook is really promising.
Yeah. Kicking rocks, rocky past, smooth sailing ahead, perhaps.
That's what we're hoping.
All right, Austal's a buy.
I think I'm going to buy it.
And we're going to take a quick break here, grab another Shirley Temple and Webster, perhaps. Hey, if you've got a stock you want to hear about on the show, let me know. You can find us using the contact form at equitymates.com, or you can send us an email, contact@equitymates.com. We'll be right back with more buy or sell right after this. Welcome back. You're listening to Buy or Sell, coming to you from the No Holds Bar here at Equity Mates HQ. My guest today is Lucas Goode, Portfolio Manager at IML. And Lucas, we're going to look at Readytech Holdings next. ASX RDY, currently $3.28. Readytech say they're ready for anything, but are they ready to rock or ready to roll over? Buy or sell?
Well, I think they're ready to rock.
Excellent.
It's a buy, Adam.
Love it.
Readytech's one that maybe most of your listeners won't have heard of.
Yeah.
It's one that we've owned since IPO. Really liked it at the time. It's founder-led, which we like to see. It's highly profitable, which we really like to see.
Sure.
I guess the closest comp that your listeners might have heard of is Tech One. It's like a mini Tech One. So they provide enterprise software, cloud-based solutions to local government and the education sectors.
Yep.
So very, very sticky customer bases once you get into them. And it's been a really great journey from IPO for Readytech. Recently, margins have contracted a little bit as they've been investing in enterprise sales, and we think that's the opportunity moving forward. We expect that they will be able to gain bigger contracts as a result of that. It's a long sales cycle with government, but moving forward, this is really a simple story of accelerating top-line growth, improving free cash flow margins, driving a higher share price.
Yeah. They seem to have a lot of products. Like I'd never heard of Readytech, but they seem to have a huge range of products that I'd also never heard of. I guess it is that they're kind of in the education, kind of local government space. Is that why we're not hearing about these things?
Well, I think that is part of it. And it's kind of a bit of an aside, but often really the highest quality software companies are the ones that provide those products and solutions to kind of boring areas,
stuff.
right?
Yeah.
Because it's everyone wants to create an e-commerce website, as we spoke about before, and therefore margins get competed away. Whereas doing student management systems for universities or TAFEs, which was Readytech's original founding business, not so interesting, but still a major problem. For those customers and real pain points. Similar with rates management tools for local government councils. I mean, that's how they raise their money so they can afford to collect our bins. Very important, but equally not consumer facing at all. And look, you mentioned the number of products. They have been a buy and build company, so it's sometimes been maybe a bit of a knock on them compared to other software companies that some people don't like roll-ups, but we actually think they've created a lot of value through acquisition. And that these acquisitions made a lot of sense with it, but 1 + 1 = 3.
Yeah, great. All right, that's a buy.
I think I'm going to buy it.
All right, next we're going to look at Brainchip Holdings, ASX BRN, currently $0.25 in the old money. This one came from our YouTube channel, at PC for me 67. Wanted to hear about Brainchip. I don't think that's his real name.
Really? It's quite a catchy name. You can never rule it out these days.
That's true. Brainchip up 16% in the last 6 months, but down 50% if you bought it 3 months ago. Buy or sell, Lucas?
That's a sell for me.
Right.
So I might struggle to fill a couple minutes on this one because I'm not actually sure they've got a viable product. They've made a lot of promises over the years.
The website's quite impressive.
Haven't met any of them. Yeah, well, I thought it was interesting that they do refer to themselves as the first to commercialise neuromorphic chips.
Yeah.
But it turns out IBM actually generates a couple $100 million of revenue from their own chip.
Right.
Quite a well-known company, IBM.
Yeah.
Tough for an ASX company with $13 million of cash to compete with.
Yeah.
Whereas Brainchip's revenue last year was almost zero. I think it was a couple $100,000.
Right.
So clearly they have struggled to commercialise what IP they have. And look, to us, it's just way too risky to be classed as investment grade. I know it's a bit of a hot copper favourite. And it's a wild ride, but not something that we'd ever own.
But AI.
Look, I've got no doubt that somebody is going to make a lot of money by running AI workloads on edge compute. I just don't know whether it's likely to be Brainchip.
Is it possible that not everything to do with AI is a goldmine? Is that what we're saying here?
Hey, we'd be going against the grain saying that now, I think, Adam. But it is interesting how many companies have rebadged themselves as sometimes they'll present the same offering that you heard about 5 years ago as a new growth channel. Back it would have been called machine learning back then. But now it's obviously generative AI linked. And you're thinking, isn't that the same product as 5 years ago?
Lipstick on a pig, as it were. All right, next we're going to look at metals acquisition, ASX MAC, currently $21.72. Only recently listed, and it was the largest ASX mining listing in 5 years, which, given there's a new miner about every week, pretty impressive. Buy or sell for MAC?
That's a buy for us.
That's a buy.
Look, it seems every man and his dog are copper bulls at the moment, but we do think that MAC, we'll just call it MAC, it's a bit quicker, the Big Mac.
That's catchy too. That's got some media headlines all over it.
Take a bite out of the Big Mac and the ASX. To us, it is the cheapest pure play copper exposure on the ASX. There's not actually that many of them of appreciable scale. So you mentioned that IPO'd recently. I actually went out to site ahead of the IPO.
Oh, right.
Yeah, so it's an old it was owned by Glencore previously. So a bit of an old tired mine. It's about 2 kilometres deep. Yeah. It's been running 60 years, which you would ordinarily mean it's quite a high cost producer, except grade covers a lot of sins and it's super high grade. So about 4% copper throughout their current ore body. And I can tell you there's two things that really stuck with me when I went to site. Number one, 2 kilometres underground, it's bloody hot. Seriously, all I did was walk around and look at stuff, right? I came back up drenched in sweat. It's hard work mining down at that depth. And the second is just like how much copper there is in that deposit. I mean, some of the faces you look at are 10% plus copper. You can see it, just the walls are gleaming.
Yeah, wow.
And we think it's a really high-grade management team led by Mick McMullen. We've got a lot of trust in him, and we think it's a winner.
All right, it's a buy.
I think I'm going to buy it.
NextDC, ASX NXT, currently trading at $17.79. And doing my research as I do on the show, the NextDC movie is another Batman v Joker. Nothing to do with NextDC. I stopped there. I'm hoping you can fill in the gaps for me, Lucas. NextDC, where are we at? Buy or sell?
Yeah, so it's a sell for me. You actually just touched upon this, Adam, in that anything AI related seems to have taken off. So for the bulls, AI is a tech juggernaut riding the wave of generative AI into the stratosphere. I'd probably look at it more as a build to rent property developer. There's got billions of cash outflows over the last few years, 2% return on capital, and it's trading on around 6 times book. Now, the truth's probably somewhere in the middle. But the issue for me is I just can't get anywhere near it on valuation. You've effectively got to value empty patches of land in Sydney where they're planning on building a future data centre. It doesn't even have DA approval yet, as if it was already a fully constructed data centre that had been completely leased to Microsoft and Amazon. So we just think it's one where, what the market sees and the reality are two different things. And I just find it interesting that, you'll even see institutional investors talk about NextDC and they'll never mention valuation. It'll just be, you just need exposure. Which to me is almost like an excuse to overpay for something. And I think for investors, they should always be keeping in mind that there's only, unless you're paying a yield, which clearly NextDC is not going to be paying anytime soon. There's only two things that matter for your investment return. Just how much you pay for it, how much you sell it for. So if you overpay, unless you can find some other greater fool to flip it onto, you've kind of torched your returns already.
Because I've been hearing that the data centers is like this supply can't keep up with demand.
And
so any data center, if we're building a data center, then it's a gold mine.
Well, I think the thing to keep in mind with there's no doubt there's absolutely growing demand for just computing workloads in general. I mean, even before everyone was talking about AI, data center usage was growing exponentially. The issue, though, is there's so much capital flowing into the space, and I'm not saying anyone can build them, but it's not that far off that. If you've got sufficient capital, there's no real IP in building them. And so it's almost, let's look at the true AI superstar NVIDIA. You've got one producer that actually can make these chips right now and thousands of buyers. That's great if you're the producer. With data centers, you've almost got the opposite. There's really only two big buyers, which is Amazon and Microsoft, the two cloud services giants. But you've got hundreds of people that can build data centers. So the negotiating power is very different. They're just not particularly high returning assets and they cost a lot of money to build.
I used to run a media server in my laundry when I used to rent a house. So
you mean a data center?
Exactly right. Yeah, maybe it's.
You could have stuck with it, mate. You could have listed on the ASX by now.
Very good. NextDC is a sell. It is time for our last call here at the No Holds Bar, and we're looking at Xero Limited, ASX XRO, currently $135.
Let's go.
Xero Limited, you had me at accounting. Going to the moon or going to zero, Lucas?
It's a great way to put it. Look, I certainly wouldn't go as far as saying going to zero, but it is a sell for us. It's on valuation grounds. So, we spoke a bit about how, I view NextDC as maybe being quite different to how the market views it at this point in time. Xero, I think, is exactly what the market thinks it is, which is a really high-quality tech company with a great product, led by a management team that's executed a really good turnaround. It's just, for us, it's way too expensive. They've got clearly a market-leading position in ANZ with accounting software, which, as you said, it's interesting that Xero is a sexy stock, but the product, it doesn't get much less sexy than accounting
I work
software
in IT.
for small businesses.
I'm not going to throw any stones.
But look, the issue they've got is they dominate their home market, but it's getting quite mature. They've got a lot of the market covered. And to get to the current valuation of around 100 times earnings, they've got to keep growing at the current rate for another decade, which means they need offshore markets. The UK, they've done well in, but it's more competitive. There's a couple other powerful players. Really, I can get to maybe half the valuation with ANZ in the UK. The rest is for the US. And it's a massive market.
Are they in the US?
They are in the US.
Are they making any progress there? Or?
It's a great question because they've been in the US a long time and no, they haven't made any progress because there is an incumbent US player called Intuit, which is a much bigger company. That has the market look reasonably well sewn up already with their QuickBooks product. And the other big advantage Intuit has is that in Australia and New Zealand, the UK, Xero sells through accountants. It's a bit of a different model in the US, just in the way their tax and accounting industries work.
Yeah.
And Intuit has an existing product called TurboTax, which in Australia, we do our e-tax online. It's provided by the government. In the US, you got to pay for this product, TurboTax. So they've basically got already familiarity amongst all their potential customer base of the product. Very hard for Xero to compete with.
Yeah.
And so we just see it as quite unlikely that they're going to have meaningful success in the US, and as a result, can't get anywhere near the current share price. And so for us, it's a sell.
Xero is a sell. All right. Well, that's it for us too. Lucas, Goode, thank you so much for joining me in the No Holds Bar.
Thanks for having me, Adam.
Where can people find you if they'd like to hear more from you or read more from you, or where do they get more Lucas?
Well, assuming everyone hasn't had already more than enough Lucas in watching this podcast.
I would find that very hard to believe if they have.
Look, my colleagues and I do an appearance on AusBiz every couple of weeks for the small cap show. Or you can check out our website at iml.com.au.
Brilliant. All right, there you go. You can continue the journey as well on the Equity Mates website. Plenty of resources there. You'll find the buy or sell tracker for this show, along with the Find a Company page where you can find more information about any of the companies we've talked about today. But that's it. Thank you for joining us. Don't forget you can find us on YouTube as well as wherever you get your favourite podcasts. I hope you'll join me next time as we jump back into the No Holds Bar. Until then, it is bye for now.